Hey everybody, this is David Skarica, stock chart of the day. So just a quick overview before we start today's stock chart, which is going to be on home builders. So on the weekend, I updated or I put up this paid members video I had done, which essentially
Hey everybody, this is
was a video that I did on silver stocks, and you can see where the GDX was much lower than it is today. These silver stocks, if we just, I'm just going to quickly scroll over when I find silver here. Uh, gold, silver, and I'll keep talking as I'm scrolling to look for some of these stocks. Because you'll see, like for example, Endeavor Silver is one of the stocks I recommended. You can see it here; it's at $1.47 a share, and of course, Endeavor now is I think almost 280 a share or something like that. I'd have to check it, or 270 a share, something in that range. Let's just quickly look. And so I recommended these three silver stocks: Endeavor, Fortuna, and Coeur d'Alene. I don't know if I'd buy them here at these levels. I look for consolidation or pullback here, but all three of them, we'll quickly look at them, have soared in price. And I did it essentially the day, like right here, like the day before they started to move higher. So don't expect that all predictions to be that accurate. That's very, very difficult to do. And, it was somewhat luck because I had been looking at them for weeks and weeks. After this big dump in mid-January, that's when I was getting really interested. And I was finding that all of these stocks were essentially, getting into these all-time lows or these really low areas where they usually have these large rallies. So you can see basically Fortuna is up about 80% since that level area. Sorry, it's Coeur d'Alene's up about 80%, Fortuna 70%, and about 80%, 80-90% on Endeavor, which, how can you complain on a 5 or 6 week return like that? So that's the type of thing I do in the members version of stock chart of the day. And if we look at stock chart of the day, that's this is the it's YouTube / at Scott Day. So obviously this is the free version, and so I have this Patreon page for the members version. The basic membership is $7 a month. Right now I have this $8 a month because I have one guy on it. You can't cancel a tier. I want to cancel this tier. Actually, I got to tell the guy to cancel his subscription, and then essentially that's it. And then so right now I have these deals on the lifetime membership. So if you do $60 a month, it's 24 months. So this will be changed. This will take $60 a month will be 48 months. And I kind of do have a no refund policy on this because once I think you're committed to that lifetime members, you kind of have to stick with it. So so I would hope that someone would do it. And then $100 a month, which would be for 12 months, and $1,000. Well, this will be a one-time payment, $1,000. I'll talk about that in a second. So that's what I'm doing. These will double in length because the lifetime membership is typically $2,000. So I'm going to change it to $2,000 in in a week's time. So this will be 48 months, and this will be 24 months when that happens. But if you sign up before April 15th, you'll get a lifetime. So what's the benefit of lifetime subscription? You get more than just these video updates. You get access to private placement investments. At some point with lifetime members, I'll probably start doing Zoom meetings so people can do Q&A sessions. You get access to my personal information, e.g. my WhatsApp number, etc. So you can ask me questions. There's a handful of guys that do that. We obviously have stock recommendation lists. And I don't do a pure recommendation list. I give ideas like I did with those three silver stocks. And then what happens is if I want to sell or buy buy more or sell, I'll put that up in an update, but also feel free to write me, say, hey, exactly what are you doing? And I might tell you, oh, in my account, I'm selling a quarter of the position. I'm getting out of this position. Sometimes I'll have positions that I'll just tell to people kind of in private that maybe I don't do in the newsletter. So you can get that access as well. And obviously the private placements is a big thing. Like a private placement, I've talked about in the past which has done very well. They're going to probably become a sponsor company as well too. Is Abound. We did this at 5 cents and the stock is now 43 cents. Now, I'm not counting my chickens before they hatch because they need to get more volume into this company when the hold comes off in a few weeks. Because it's at very minimal volume right now can move this thing in each direction. You can see in just the last couple months, it's had moves between 20 cents and the low 40s. So, but this is a example of the type of thing. And this is 5 cent deal with a 10 cent warrant. And of course, I've talked about Inca One, one of my sponsor companies. We did a 10 cent financing in Inca One. I think it closed in mid-January. And yeah, you can see that in roughly 3 months, we're up almost 80%. And of course, there's a warrant at 15. So these warrants give you the opportunity to buy more stock at a fixed price. I've talked about it in the past that, I'll talk about it just quickly here before we get into the offer again. One of the stocks that that's always near and dear to me is Fortuna Metals. And you can see here, Fortuna, sorry, is Tinka Resources. And Tinka, I did a 10 cent placement back in 2010, 2000, and the stock, you can see this jump up here in Tinka till about 50, 60 cents. I exercised my warrant. See, a lot of times you exercise your warrant, you're up. You don't have to put new capital to work. You can sell the little bit of stock that you need to use that money for the warrant. So basically, you're just rotating the money. So essentially, a 10 grand investment in this, I still remember, became about 110,000. And at that time, the Canadian dollar was north of par. So I just told my broker, wire the money into my account here in the Bahamas. And the down payment of my house was roughly 110,000. It was 120 actually, to be exact. So then I had these 10 grand of my own money, and that paid for the down payment on my house. So that's how these things can work. So, and of course, when you have these warrants, like same thing with the bound, I'll just, I'm very into full disclosure and telling people what I'm doing. So I did about 190,000 shares of this. I did $9,500. So roughly 10,000. So at 40 cents, that would be worth, 80 grand, right? But same thing with the warrant, with another 190,000 warrants at 10 cents, and by the way, I have a broker who will lend me the money. We exercise the warrant, and then we just sell the stock. We have to pay back for the loan. So I don't even have to use new capital when I'm doing this. So anyhow, so that would basically mean, like, let's say, $19,000 at 80. At 40 cents, you would have to sell roughly, I don't know, 50,000 shares, because I'd be 50,000 shares at 40 cents is 20 grand. So let's say you have to sell 50,000 shares. So I would have 140. I would have 330,000 shares left, at 40 cents. So essentially my $10,000 would be worth, what 150,000 shares or 140,000 shares is, at 40 cents is, over $100,000. So it's like $110,000. So that's kind of, where you're getting into these things is, 340,000 shares is way north of $100,000. It's like I'm closer to 150,000. So that's what I mean. Like the $10,000 investment basically has become 150. Now, again, the stock has to hold up. That doesn't always work, but and some, not all private placements go higher, but this is example as the type of thing you get access to as a lifetime member. So, and then also do pre-IPOs. We did a little deal at 5 cents. So you have to be trading, mirror mismining, it's called. I've got another deal that may raise again called Golden Planet. It's the same guys that did Nevada King and Newfound Gold. I did that years ago at 90 cents, and the CEO has been waiting for the gold market to turn around. So I'm expecting by the end of the summer that will be trading, and it will probably trade at multiples of where it's coming out. So what I have also, the best deal on the lifetime offer is obviously not these payments over a number of months, but there's $1,000. It now says a month, but it's a one-time payment, $1,000 lifetime. And then what we'll do is after you send the 1,000 on Patreon, I will cancel your subscription, and then you won't have to pay again. I'll add you to the lifetime email list, give you the passcodes, the username passcodes to log into things on the site. And by the way, at some point in the next month or two, I'm planning, definitely by early June at the latest, I will move addictedtoprofits.net to Stock Chart of the Day. What I'm going to do is just redirect the URL and also redesign the website for lifetime members. So that as well. I may start a monthly membership again, which is roughly the same price. And maybe I have an account with something called ClickBank, which is $70 a month. So you take $2,000 over $70 a month, that's $840 a year. So maybe I would make that one like a 20-month membership or something like that. Or sorry, a 30-month membership, something like that. And that would essentially be the lifetime. I don't know. I'm not really into the whole monthly newsletter thing again. I like this just either sponsoring stock chart of the day via a cheap Patreon, or I'm going to start a subset stack as well, a cheap membership, or becoming a lifetime member. I like that business model. It's very simple. It's very, easy to do. And remember, with stock chart of the day, the free videos, I can continue to get sponsored companies, so that helps, subsidize and sponsor the site as well. And I'm really going to start growing it now. My goal always was the first 10 to 12 months, and about 10 months in was going to be, let's just get the content out there. Let's just talk about a new stock every day. Let's talk about a new market every day. Let's talk about things happening in the markets. Let's get a good backlog of content on there. And then, then I'll really start to grow the page. And it has grown. Like, I was getting like 100 to 150 views in most videos when I first started this. And now I've noticed I'm pretty, if you look at these videos here, 253, 260, 276, these ones, minimum I'm getting 150 now. And many I'm getting, you can see this one had almost 400. I had one I did in gold recently that had, I think, over 600 views. So I'm getting basically minimum, I find 250 now, you can see, especially because I know I have a lot of gold resource commodity people. So I will be heavily tilted towards that stock chart of the day, because I know it's where I'm getting my subscribers from, my viewers from, etc. So I hope I'll put a link to the Patreon, both on the website, both underneath this video, and in the email I'm going to send. So if you're interested, like I said, I'm not someone who likes to promote, but I'll probably do it right now. Today's a week away. And probably next weekend, when I put out the video Saturday or Sunday, I'll just give you the 1 day notice that essentially you could still get the discounted lifetime memberships. And, this, like I said, the $1,000 will be a one-off thing. Just buy it and tell me it. I'll cancel the subscription, or you can cancel the subscription. You can, if you don't have a Patreon account, you can even get rid of the Patreon account after you buy it, if you don't want it. There are some good stuff on Patreon, especially if you're a fan of podcasts, but I'm not going to get into that now. So today we're going to look at, now that we're off of that, is let's look at the Dow transports, or sorry, the Dow home builders. So funny, I looked at this chart. I put this up on my Twitter over the weekend because I was just like, a lot of times, that's why I like weekends sometimes, and I work on the weekends because I just like to kind of decompress, and then just like, have a coffee in the morning, maybe sip on some sparkling wine in the afternoon after I work out, and look at these charts. And what was interesting, I was looking at this Dow Jones US HB, and I was looking at the shorter term chart first. And I was like, 2,600, that seems really high. Like, especially when you see that after this correction last fall, it was 1,600. So you've had over a 60% rally in just like, a 6-month time frame. So I was like, where was that during the top, in 2005 for home builders? And I'm going to put this, it isn't on the log still. We're going to go back even further. We're going to go back to 1998. So we can see the bubble, the first bubble. You can see the first bubble here from 2000, where the home builder index went from under 100 to over to about 1,100. And I got a funny story about this. Then it bottomed here. And by the way, I'm going to show you a story of two opposites, a tale of two housing markets, I guess we could call it. One being top, one being the bottom. You can see it went back to essentially where it was in 2000, based for a number of years, then gone up, and now it looks like we're having another housing bubble vis-a-vis the home building stocks. I don't think you can really look at the PDs of these stocks, because home building, it's one of those low margin businesses like automakers. When automakers are booming, you'll see Ford and GM, they all have like price earnings of 6 or 7, right? Doesn't mean they're cheap. And then during recessions, the problem is the margins are so small. When those decline, when sales go down by like 15-20% in a recession, boom, the automakers all lose money. And a lot of the times, we saw this in 2008, they go bankrupt just from that. We saw that in the early 80s with Chrysler. And then obviously with Ford and GM, we saw that as well. GM, needed, a government bailout. So, but anyhow, I digress. We're going back to home builders. So we can kind of see here. So let's look at a few of these. This is NVR, you can see this. I remember this stock. This was a stock that's a very well-run company, by the way, but they held up better. And then you can see this is way above. It was like $1,000 was a high in the last housing bubble. Now it's over 7,000. So we'll look at Toll Brothers. And you can see Cole Brothers has gone completely parabolic. This may be looking interesting for a chart. You can see did the same thing here when it went from, $5 a share up to 50. You could have bought this at the COVID bottom at 15. It's now 124. And this is not, again, these aren't tech stocks. These are home builders. And then we'll look at KBH. That's the last one we'll look at. And you can see KBH actually was one that fell the most. And then during the housing bubble actually went below where it was in the late 90s, early 2000s, in 2011. And again, you could have bought this as low as $10 a share, and now it's 66. So it really hasn't gone parabolic, but the move here does look similar to the move in 04, 05. So now let me tell you this story. This is kind of like one of my, the shoe shine story. So for those who don't know anything about me, I moved to the Bahamas in 2005. So I was traveling with my father in 2005, and we went to Florida, and we're staying at the Sheraton. I don't know if you remember the Sheraton Bell Harbor, beautiful hotel. I think it's no more. They turned it into condos, but we were staying there, and it was essentially, I'm going to really zoom in this so you can really see it. In 2005. So we were staying there in late June, early July, because I remember we flew to the Bahamas, to Nassau from Miami a few days before Independence Day. So we were right here, and we had this Haitian cab driver. This guy could barely speak English, right? And we're looking at all these cranes everywhere. I remember in 2006 when I went to Miami, even though we were starting the bus, but it really hadn't really hit home prices. It was about 07 it really started to hit home. So I just remember seeing cranes everywhere. I went to Coral Gables, and I just remember seeing cranes everywhere. But anyhow, this story, the Haitian home driver, he starts knowing like the prices of everything, the high-end homes, the low-end homes. He says his little, house that's probably just a little, 600 square foot thing with, a 1 bedroom and probably not the greatest area was 60,000. Now it's 140,000. And I'm looking at my father in the back of the cab like, man, this is like the shoe shine boy for 1929. I told my dad, this is the top in housing. Like, this guy can barely speak English, and he knows the housing prices of everything. He knows what his house is worth. So, and you can see what it ended up happening, ultimately, the home building index went from 1,100 actually to as low as 150, but in the next 3 years went to 250, went down over 80%. And of course, many homes went down 50, 60, 70% in price themselves. So now we get to the bottom, which is the exact opposite. So when I got killed in the market, or hammered in the market in 2008, because I owned junior miners and gold stocks, thinking that they would be a hedge. And I'll show you how they were not. We're going to look at the CDNX right now. You can see what this happened here. It was fine. They were holding up fine, and then boom. Luckily they came back very quickly. I made money back very quickly, but I got killed thinking that, okay, these mining stocks, they're gonna hold up because they held up in 2000 bear bull market, and same thing as the HUI held up. And luckily they were the first thing that came back, so I was fine within a year. But I remember getting hammered in that fall of 2008. So anyhow, I got hammered then, and essentially, that taught me, lessons in the market and all that sort of thing. But also, what it taught me is like, I want a house, because back then I was renting an apartment in Nassau. I was getting into my early 30s. I was no longer this young guy anymore. So I was like, I need to buy a house. So I told you about that Tinka story. So in 2011, after Tinka goes higher, I'm like, okay, and I was getting sick of Nassau. Nassau has a lot of crime, etc. And I'm like, okay, I'm gonna buy a house, and I'm gonna buy one of the other islands. The 3 islands I really want I was thinking about were Exuma, Eleuthera, and Abaco. So I like the Eleuthera the best. I remember driving. We have this thing called the Glass Window Bridge here. You can go look it up. It's this bridge where I'll show it to you quickly. Glass Window Bridge. It's this amazing bridge where the Caribbean meets the Atlantic. You can see how beautiful that is. And I just remember driving over that bridge on my way to staying at this hotel and seeing the sun set, and over that Caribbean side. And I was like, wow, man, this is the place I'm gonna move. I love it here. And I'm from a small town, so I didn't, it being small doesn't bother me. So anyhow, I bought literally right here that summer of 2011 was about when my house, it hadn't closed yet, but when the offer was accepted. So again, if we go look at zoom in this, you can see the top here, and you can see it was a little above the 2009 low, but in terms of actual housing prices, that 2011 period was the low, 2011. And I essentially bought here, and prices, of course, in housing everywhere, including here in the Bahamas, have gone crazy. Now, that was just luck. That was just pure, like, like I bought this house. I didn't even look at it as an investment. I still don't look at it as an investment. I've done a lot of renovations on it because the guy, unfortunately, I bought it from did a lot of shoddy work. So anyhow, that's basically it. So there's a, the sign at the top and the sign at the bottom. And I remember going to actually Las Vegas in 2010, 2011, and I had a friend who was a real estate agent. And she showed me around, and she was like telling me these really nice houses right near the strip that were like $200,000, sunken living rooms, chimneys, fireplaces, pools. And those houses would probably be worth 600,000-700,000 now. So, or more. Like, it's just crazy how cheap things got. And part of the reason is what nobody talks about, even though I was able to get a loan here because it's a Canadian bank, a lot of the US banks weren't lending in 2010, 2011. So a lot of those deals, boom, were just cash deals. Okay, so that's all I wanted to show you. That it looks like to me that housing, a couple stories about the housing boom and bust. But I just wanted to show you that like housing is definitely looking like another, bubble here to me. Where can this really go? And as I've talked the last few times, if we are in that kind of 29, 87, there's no guarantee that we are, but we would see like some kind of correction right here in the market, probably in the April to May period, and then a final blow off in the summer. And definitely if we got that blow off, things like the housing stocks. I have another financial company, which I've talked about. If you're interested in shorting and puts and that sort of thing, I've talked about it in the members edition. It's a very highly leveraged financial company, which I think would completely crash in a downturn in the markets. And actually every downturn in the market, this company has crashed in price. So that's about it. I know this is a little on the long side, but yeah. So if you're interested, I know many of you are. I've had a few emails from people. I'm going to actually, send you the link to what I'll do is something the people are interested. I'll just send you the link right to the $1,000 page. Just sign up for that. We'll cancel your subscription right afterwards. I'll add you to the lifetime list, et cetera, et cetera. So everybody take care. Sorry for the length of this one, but I think it was good. And plus, I had to talk a little bit about the promotion, some interesting stuff there on housing. I always love that Haitian cab driver story. I think that's a hilarious story. And, I can't believe it's happening again. Like after the 2000.com bubble, I was like, this is a huge bubble. It was 20, and then the housing bubble happened. And now we have the everything bubble where people are in NVIDIA, Magnificent Seven, housing again. And it's just crazy to me. And I just think part of the reason is our standard of living has gone lower, and people need to make money in these asset markets. So in the stock market, crypto market, whatever, maybe housing market. So people are actually driving prices up, not just out of greed. Greed is part of it, but out of desperation, because they're like, the only way that I'm going to have a half decent standard of living is not like the 1960s, 70s, 80s, 90s, where I can go to school, get a good education, have a job making 200 or 300 grand a year, and 200 or 300 grand a year actually meant something, and live comfortably. And now it's like, no, I need my stock portfolio to go up 5 or 10 times. I need I need the price of my house to go up, et cetera, et cetera. I need tons of houses so I can have rental properties, like whatever it may be. Anyhow, I hope you enjoyed this, and everybody take care. And yeah, we'll talk a little bit more about the offer going forward.